We interrupt. The Dow Jones suffered a steep drop today, closing well over 600 points down. That's actually the Dow's worst single-day point loss in over 6 years. It's been the worst week for the stock market since President Trump took office. Rick Newman is a Yahoo finance columnist. He joins us now by phone. Rick, what happened today?
A couple of things happened. Traders got a little bit nervous about interest rates going up. That happened at the same time we got a jobs report this morning that was very good, but that jobs report showed that wages were going up by more than expected. That is a good thing in itself, but that also suggests that inflation might be going up a little bit more than expected. And when inflation starts to heat up, the Federal Reserve hikes interest rates. So what really is going on today is traders are thinking the Federal Reserve is going to be a little bit more aggressive about hiking interest rates than they expected maybe just a couple of days ago. That has led people out of stocks into bonds, and that's why we saw the sell-off today.
So you see this sell-off. It's the worst week for the markets in 2 years. Is there concern for that? Not really. This is the kind of downturn you actually want to see. We've gotten used to the idea that stocks only go up. Yeah.
And you and I have not said the phrase Dow down very much at all during the last couple of years. But the stock market has to go down every now and then. I mean, there have been a lot of investors and market analysts worried that the stock market has gotten too frothy, that it's building into a bubble. And this sort of thing, probably lets some of the air out of the bubble. People will say, okay, well, there is some reality, some ground truth here in the markets after all. We'll see. We'll get a better sense next week. We'll see. I mean, one of the things to look for next week is, do people want to buy now? So are some people saying, oh, I think stocks have fallen by too much, and I think they're going to go back up, so maybe I'll start buying. But even if we saw the stock market coming down a little bit more next week, I don't think that'd be any problem at all.
So those market analysts, Rick, that you talk to, what is it that they're looking for in the coming months, especially as you assess the health of the economy?
The economy is very healthy. There really is not much at all to worry about. There are no major signs of recession right now. We know that the tax cuts that President Trump signed at the end of 2017 are going to boost corporate earnings, which means that's going to translate directly into higher stock prices. Now, we don't know how much of those stock price increases are already baked into the market and how much might be forthcoming in the future. My guess is a lot of that investors have already bid up stocks quite a lot, expecting those better earnings. So the real thing to be watching now that investors are going to care about, given that if all that remains fairly steady, is the Federal Reserve. The expectation has been for the most part for 3 very small interest rate hikes this year. Now, analysts are saying maybe the Fed needs to do it 4 times, perhaps even 5 times. And the reason the Fed does that is to try to head off inflation before it gets out of control. Inflation is not a problem right now. I mean, it's barely above 2%, but we know from history that the Fed's job is to preempt inflation, because it's hard to counteract inflation when it gets too high and you're sort of behind the curve on that. So that's going to be the Fed's job in 2018, and that is one of the main things investors are going to be watching.
Rick Newman, thank you for joining us, Rick.
Sure thing.